Hello everyone and welcome to our weekly commodities update. My name's Craig Erlam, Senior Market Analyst at OANDA. In this video we'll take a look at some of the more traded commodity charts. So we'll start with gold, then start with oil, so WTI and Brent crude, then gold, silver and copper. As always, all feedback is welcome. If there's any charts which you'd like me to include in this video, then please do just ask. Let's start with oil, because let's be honest, that has been the most heavily focused commodity really recently. It's the one that people have been talking about. It's the one that you'll have been reading a lot about in the media. We had the big OPEC meeting, and actually the afternoon of the meeting included non-OPEC members, including the likes of Russia, where they were due to discuss what needed to be done about the oversupply issue, which still hangs on the markets. We're now almost into June, and they were hoping by this point that the market would have fallen back into balance, or at least be on track to, but it would appear that that is obviously not the case, which is why prices did fall back towards these low 40s, as you can see around here. It was agreed that a 9-month extension was needed, which they believe will bring the inventory number down back to the 5-year average, which is what they believe to be a market back in balance, which should help to support oil prices above the $50 level, which will enable these countries to remain profitable. Of course, this is all going to be very dependent on the US shale industry and how well they adjust once again to these higher oil prices, and whether the increased output that we see in the US offsets, or how much of it offsets the cuts, which still will be 1.8 million. The one important thing for the meeting was they didn't deepen the cuts, which was being speculated about. They just maintained the cuts at 1.8 million barrels a day, which, like I say, they're hoping will help to rebalance the market. Now, so far the US has increased its own production. The shale industry has, which has offset some of the cuts, and like I say, it'll be interesting to see how much that continues now over the coming months. Now, the important thing is what's that going to mean for price, because ultimately that's what I'm sure most of you are wondering. Now, we had this spike higher in oil in the lead up to the actual meeting itself. You can see that the day it happened, that was the 25th, 5 days ago. Now, you may be wondering, well, why, if they announced an extension, a 9-month extension at that, why did we see a 5% drop in the price of oil? And that's simple. This was a typical case of buying the rumour, selling the fact. The market bought on the expectation that we were going to see an extension, and by the end, a 9-month extension was all but priced in, if not fully priced in, as it turns out. And there was even a little bit of pricing in for a possible deeper cut as well. So once we hit this level, and once we saw the deal that being announced, then the market realised that it was priced in fully. So the people who were long obviously started taking in some profits, and once that started to happen, then it was a bit of a domino effect, and we ended up back up below $48 a barrel. Now we have rebounded a little bit higher off the back of that. In terms of where we'll go next, I guess it all depends on whether the market A believes that we're going to find balance, and B whether the market believes that the US is going to ramp up. Now, based on how we moved last time, it really wouldn't surprise me if we do trade back towards these 54.50 through 50.50 levels. You can see here that when the last deal was announced, we kind of stabilised for 3 months between 50.50 and 54.50. I wouldn't be surprised if we see a similar thing again, and then we start to see how the deals played out. Alternatively, because the US has already ramped up production, so the picture is a little bit different than last time and is expected to again, maybe we will languish in these slightly lower levels, somewhere between the highs we were reaching and the levels we actually ended up at before this new deal was announced. It all really depends on how much belief the market actually has in the deal to succeed. The important technical levels, as far as I'm concerned, 48 and 47 stand out for me. 47, of course, being an important technical level around here, and also just on either side of this dip as well, and then 48 being an important technical level from the 11th of May onwards, most recently a couple of days ago. To the upside, well, the one that stands out, of course, is 51.50. 50.50 though is another important zone, and I think that's why we've seen it respected on a couple of occasions here. And given that that was the low from the previous, or that was the lower end of the range previously, then that would strike me as being an important level here. I think a break above 50.50 and we'll start to see that come under a lot of pressure, and potentially then see a move higher on there. 48 and 47, of course, as I've already mentioned, important levels to the downside. Next is Brent Crude, and very similar. We had the trading range in Brent Crude, though. It was really between these kind of 52.50 through 56.50 levels. So again, if we break back through 52.50, which is currently providing a little bit of resistance, then it would suggest to me we're potentially going to head back into the same kind of trading range we were trading in shortly after the previous meeting. Of course, there's a 53.60 level here, which was the support. If you look in on the 4-hour chart, I've not just picked a random point here. This 53.50 here was a notable support here, and you could also even look at 53 as being a potential support level as well, which I'll just add on here. But ultimately, I think if we break through the 52.50s, which was again this important zone of support here during that period, then I think we could be actually looking a little bit higher with the key test following this being 54.50. So 52.50 to the downside currently. 52.50 is this kind of notable level as far as I'm concerned. 53 and 53.50 potentially above that, but then the 54.50 as well. I know I'm saying a lot of numbers here, so I apologise. But you can see on the levels on the charts, 54.50, a break of that, and I think we could be headed right back up here. So again, it all depends really on how much the market believes in this OPEC deal and what it's going to achieve. Gold has been trending higher. Now, I did add a notable level here around 1264. Notable because it's been a notable level of resistance on a number of occasions previously. I've said on past videos that the momentum still is with the bulls. We're seeing a series of higher lows, even if they are quite deep dips on the back of it. We had the 1264, which was providing resistance along the way, but then we had this rising trend line just below here, so kind of like a rising triangle, which would have suggested at least that momentum, in line with the previous message, is with the bulls, and we're potentially going to see a break above that 1264, and we did eventually see that. Shortly after this, though, we did see it come back and test the trend line. Now, I think this is a little bit clearer on the 4-hour chart, what we're seeing right now, because we've come back, we've tested this, but it looks as though it's looking a little bit heavy, so I'm very intrigued by this right now, because we're back below this 1264, but also if we look at the momentum indicators, you can see that the MACD histogram suggests that this most recent high was made on lower momentum. The MACD moving average is potentially supporting that, and the stochastic as well. So while it looked like, or at least appeared to be, a bullish break above the 1264, it really has lacked that big momentum shift to the upside. So if we see a break below this trend line, and the rising trend line actually comes from the 10th of May lows, so 20 days ago, then that may suggest we have actually lost it to the upside. And while we had that initial break, it hasn't been enough. And what I always find is when you see these levels, and 1264 I think is notable just because previously it has been a notable area of resistance quite clearly. When you have a break of these levels and you fail to get that next drive to the upside, that's sometimes can be quite a significant signal for the markets that while it appeared to have had, it's almost like a false breakout, I guess. We got the break above, but it didn't act as the catalyst for the next spike higher, and that can sometimes be a bit of a bearish signal, and the fact that we're seeing this trend line now coming under pressure may well support that. So I think if we see a close below that trend line, then we are potentially looking at a bit of a move to the downside, at which point the first notable support comes around these kind of 1253, 1250 levels, with it being the most recent support, potentially a bigger move lower, and yeah, if we see a rotation off the upside, then we've got this kind of new resistance again around 1270, which, as you can see back here, was also a notable zone of resistance again. So I think a break above 1270, and we could be looking, I think we could be looking at a move back to these kind of levels here around 1278, 1280. Again, prior support and resistance, but even potentially even back towards these kind of close to 1300 levels. But for me, this looks like it's lacking a little bit of momentum in the shorter term. Next up is silver, sometimes referred to as the more volatile younger brother of gold, I believe. Correct me if I'm wrong. But we've stabilised around the 1750s here. You can see here the level I've drawn on. Actually, let's start on the daily chart. I've entered it straight on the 4-hour chart, and you can see that the level, this 1730, which I've highlighted previously, is a notable level of support and resistance for quite some time throughout this entire period. So that is where we actually ran into resistance initially. Now a break above here would at least suggest that it's looking a little bit more bullish, and at that point the next big levels around these kind of 1775s, which is this prior resistance. But as with gold, we've seen a breakthrough what is a notable level. I wouldn't say it's a major resistance level, I'd say it's a notable level, and then we've run straight into resistance around 1750. Now if we drop to the 4-hour chart, you can see that we've actually failed to make a new high at the last time of asking. Of course, we're still part of the move, so we could still see this move on back high. But there is clear resistance around these kind of 1747 kind of levels, and momentum again is starting to fall out the move. So I'm wondering if we're potentially going to see a bit of a broader correction now. There's no clear trend line to be drawn on here that would highlight it. But if we see a break below these lows around 1722, then what we would actually have is a double top, because we've kind of run into resistance around the 1748 through 1722. So that could potentially, a breakthrough here could trigger a sharper move to the downside, because that would effectively be the neckline of the double top. The size of the double top being around 26 cents, so that could potentially suggest we're going to see a move back to below these kind of $17 levels, back towards these kind of previous supports. Again, textbook move based on the size of the double top, projected below the neckline. Again, that's of course not advice, that is just purely straight from the textbook, as I always say. I think in the longer term this is potentially looking a little bit more bullish, and maybe this is just looking into correction territory, given the fact that we have had quite a strong rally. But it will be interesting to see how they materialise, because as with gold, it does appear that the momentum is struggling a little bit with the rally, even if we have taken out notable levels. Copper, on the other hand, continues to look, I think is starting to look potentially a little bit more bullish. We have had this kind of consolidation, this downward channel, so we have seen a bit of a correction already here. We had a rebound off the 50 fib level around 245. We also ran into support around the 200 and 233 day simple moving average, potentially a signal with them coinciding with the 50 fib that we've experienced the correction. Now until we actually break through the top of this channel, then it may continue to grind lower. Clearly there is this kind of this falling channel which we have been trading within now for the best part of 4 months, and until we break above or below, then it would suggest that we're going to continue within, of course. That goes without saying. But the fact that we bounced off that 50 fib and the moving average at least would suggest that there's potential for momentum to build to the upside, and these 253 where it's now finding support. Again, prior resistance turn support. We've got these lower series of highs, so potentially we're going to see a bit of another move lower before we do potentially again see it move higher. But should we break higher and break through these kind of 258 levels, then that would suggest again the 260s are going to be a threat. And I think that 260 level I'm trying to get to in a roundabout way is the key one for me, because not only would it mean a break through the top of the descending channel, but it would also mean a break to a new higher high. The one thing I would say is just a little bit of room to maneuver here, because this is a bit of a rougher channel than normal. We are touching a few levels, but then we've also seen the occasional move above it, so maybe a little bit of room to maneuver. And I think importantly a close above would be a much stronger signal, but 260 I think is key for me to the upside with regards to copper. For more in-depth news and analysis, check out OANDA Market Pulse at marketpulse.com. You can also find out more about OANDA and sign up for a free demo account at oanda.com. Here you'll also get access to OANDA Forex Labs, which has a lot of great tools designed to help you with your trading.